You've had some windfall profits in recent times, and investors may have got spoiled. Is this new level of returns a new normal that investors need to get used to?
Look, thank you very much. We actually reported a very good result today. It's one of our best in history, and we declared the second highest ordinary dividend in the 150 years history of Rio Tinto, but it was lower than last year, and that was simply because we were having record high prices in 2021. But if you compare to almost any other year, 2022 was an excellent result. And may I remind you, the return on our capital employed, and we are a very physical long-term business, was 25%. So it was a very, very good financial results that we had in the year. And we also, during the year, improved our operational performance.
So you are separating, though, some businesses, and I want to get down to that. The coal from the copper, the rival miner is separating some business of coal and a copper. This is Teck Resources, and you have long admired some of their copper mines. Do you think there's an opportunity for you to get in here and make some purchases? I mean, you talk about the investment, the CapEx. It's a very long-term business. Does this make sense to you?
So what we are doing is we are working and shaping our portfolio. And actually last year was probably the year where we shaped our portfolio the most for at least the last 10, 15 years. But it was mainly about developing things we already had in the copper development, such as the Oyu Tolgoi mine in Mongolia. But we also acquired the minority shareholders, took TRQ private. We did an acquisition of a project in Argentina of lithium, Rincon. But some of the internal developments meant more iron ore in Western Australia, Rhodes Ridge, Western Range. So we had a lot of ongoing business development. I don't really believe in that this company needs major acquisitions, but we are actively looking at smaller things that could work for us. But my focus is always, are we the right owner? Does it make industrial sense for us? And what guides us right now is the demands from our customers, and we can still strengthen our business in battery materials and copper, etc. But I think that's what you can see we did last year, and we will try to continue to do so. But we are not growing for the sake of becoming bigger. We have to be able to create value. Otherwise, we won't pursue any M&A.
Good morning, Jakob. It's Guy. Thank you very much indeed for your time. Let me add my thanks to Matt. You talk about what is happening with battery materials. You've talked in the past about the fact that you would like to acquire lithium and lithium mines. We do, though, have some of the big EV car makers, Tesla's the name that springs to mind, also actively trying to pursue those products. They are willing to pay, and they are willing to pay handsomely. And I'm wondering, when you talk about value, whether or not you think you're going to be able to compete with those other potential owners of those assets.
Well, we certainly don't want to overpay, but what I suppose, my assumption is that what the car maker wants is lithium. And you also have to have the competences of being a miner. So maybe there's something that can be done together. And that's what we are doing right now. We are selling lithium to some of the car makers, whereas we are the miners of it, because that's what we are good at. We are not going to go into car making nor battery making for that sake. but we want to both extract and process lithium.
Yeah, be interesting to see you go into car making. I guess we could talk about that offline. Let's talk a bit about the cost base. One of the things that makes a good miner is managing the cost base, and that is incredibly challenging right now. Jakob, what kind of inflation are you seeing right now, and do you see any signs of it peaking?
Yes, I do see it peaking. If you look at our results last year compared to the previous year, then there was a significant increase in cost, and it was basically in three areas. One area is energy, second area is general inflation, and the third area is very high increases in input prices to our aluminium business. But I do think that we are seeing now, and we have seen lately, that energy prices have been falling, so we're not going to see that increase this year. That doesn't mean that there's not inflation in the system, but you don't have inflation on such a wide range as you have now. So I'm cautiously optimistic of lower inflation, but there are some inflation that stays. And unfortunately, we have very significant business in areas where there's a very tight labor market. And that means that there will be some pressure on wages. For example, in Western Australia, where we have our big iron ore mines there, it is very difficult to get sufficient labor at this point in time. So there are some bottlenecks in the system, but it's manageable, and I don't see as much inflation as last year.
To add to a couple of those things, you have a stake, an investment here in Guinea in iron ore, Simandou, that project there. Arguably, according to our reporters, a great prospect. But if Chinese steelmaking declines, are you worried that there could be oversupply in that market?
Yeah, look, that's always a risk, but we are quite confident. Steel is needed. Steel is needed in urbanization in the developing world. You see growth. Of course, you also see more circularity in society, but there will still be a very strong demand for iron ore in the foreseeable future. And right now, we see China opening up, and a lot of the world's iron ore demand is coming from China. So at least the short-term outlook looks attractive. It is indeed a very, very interesting project that we're doing in Guinea. It's going to be maybe the biggest mining project in the world, and right now we are sitting and negotiating, and all parties are very interested in progress. So I hope that we will come to an agreement with the government of Guinea and can start making it real.
Jakob, you mentioned China. A couple of quick questions. Firstly, how are you thinking about the Chinese recovery? It looks like it's happening more quickly than many people had anticipated. How are you thinking about it? And when you think about what's happening in Europe and the United States, do you see a recession in those economies?
Yeah. No, look, I was in the US just 10 days ago, and it's probably fair to say that 3 or 4 months ago, people were very concerned about recessions in the West. But so far, the economy of the U.S. economy has been stronger than anticipated, and I guess the recession risk is lower now. Secondly, the energy crisis in Europe seems to be much less than what was anticipated, and therefore the European economy is also stronger than expected. And then finally, China is opening up, and you have already seen the market reacting back in November. And there were actually some data points, because we could see, for example, that the stocks were very low of iron ore in China, and therefore some restocking would be necessary, of course, partly because of high consumption. So we have already seen it for a while. This is happening in China, and it seems to be happening in a good, controlled, positive way. There's also been a lot of alarmism around the property market, but actually when we look at the whole property market in aggregate, it looks in a better shape than some of the indicators. So we are kind of quietly confident that the demand factors are attractive for our industry this year, mainly from China, but probably from the whole world.